Yo, what is up, everybody? Hello, it's your boy TSD back with another episode of Bullish's Top Stocks to watch this week. And why, before we jump into it, a couple things. One, thanks for joining me. Two, hey, these are only my opinions. Do your own due diligence. Three, hey, give me a sub here on YouTube. Help me feel good about myself, but also follow me or follow us rather on at basically wherever you get your social media, real_bullish, wherever you get your social media poison. But hey, I'm going to make this hopefully 25 minutes or less. That's what she said. Let's jump into it. All three indices were down for the week. Hopefully you can see my screen. If not, I'm coming to fuck. Just showing the QQQ, DIA, and SPY that follow, the NASDAQ, the S&P, and the Dow. So basically all three were down this week, across all three. And there's a lot of things that play into that. It's a weird time of the year. Hey, one, we have no stimulus yet. And as of right now, we probably won't have one. But kind of smart money was already kind of saying that, hey, we weren't going to have anything before the election season, right? Just because, hey, we had that deadline, that super hard deadline. But hey, also, hey, that's probably going to come after. So, not the worst thing in the world. I mean, it's the worst thing in the world. But also, hey, as long as we don't have a crazy tweet come in, I think we can expect kind of move along this lines. But hey, no stim, election started, go vote. But basically, early voting is already breaking records. We are a week or so away from, general elections. So that's playing into it. COVID spiking in almost every state with possible third peak on the horizon. 4 earnings before major earnings this week. So we had earnings, but this is, I think Jim Cramer said it best, this coming up week is like the Super Bowl for stocks. So to me, it was like a healthy expected pullback. If we look across QQQ, we were going close to all-time highs, looking over week, the Qs, the DIA, and the SPY. We're really playing with those all-time highs, but then we pulled back from that healthy pullback, I think. I mentioned it last week. I was more cautious than optimistic. This week is kind of reverse. I'm more optimistic than cautious, but still I have a healthy dose of caution, right? Jumping into why I'm kind of saying that. If we look at the week ahead, hey, heavy earnings play this week with most of the FANG stocks. And if you don't know what FANG stocks are, Facebook, Apple, Amazon, Netflix, Google, basically all the QQQ or tech high flyers are reporting basically on Thursday. Basically all those FANG stocks, I think like three of the 5 or whatever, or 4 of the 5 are reporting on Thursday, along with Facebook, and I think Starbucks is also on Thursday as well. So for me, the valuations for those FANG stocks are kind of high. So I'm not looking to play FANG. I'm sure that would be like a mistake on my part, but as we saw with kind of Netflix last week, you can always try to catch a reversal bounce for these kind of high flyer stocks. I should have done that with Chipotle last week. I'm playing things a new way this week, but last week, I thought I was getting some good with Chipotle, and you can argue that it was good, but it's all in the way you play it. I should have saw that 7 trading days before the earnings, they had already kind of moved heavily, like I think 3 solid days of really big jumps. So if I would have, usually look back 5 days. If I would have looked back 7 days, I would have saw that there, and then I would have played the reversal because it's it definitely dipped down, but coming back. But anyways, that was a lesson learned. Don't get bit by FOMO. There will always be another runner. Speaking of runners, I wanted to play social this week with Facebook and Twitter reporting, but Snap had like a 30-40% runner over the week. So I think it brought those social stocks, like their prices, closer to what they were going to be trading at the ER, even with great earnings. So I'm not so hot on those just because Snap pulled all those up. It was kind of like, rising tide play or whatever, sympathy plays across all of social because Snap really showed out last week. But I think others will be watching it, but still it's a little bit too much for me. But anyways, like I was saying, hey, looking across these indices, hey, you see the Qs by the week, everything's down over the weekend. Specifically though, for tech, looking at the Qs right here, they're still in that downward channel. But what I like is that, it was a lot of undecidedness. It's kind of consolidating here, that 284 area. It went down, it went up, but still, I think it's kind of fighting. You see for the day on 10/23, so that was what on 10/23 was on Friday. It definitely had a really great, a hammer here or whatever, indecision, but also pulling it back up, which I love because that shows indecision. Buyers or sellers tried to come in and pull it down, but buyers kind of brought it up. You see indecision where the body is basically, the real candle body is, at least twice as long as the wick here, and that's what you see exactly. So, I think it's, that's what kind of makes me cautiously optimistic. Yeah, we were down for the week, but, I think definitely, leading into 10/20. So what was that? 10/20 was, Tuesday or whatever. We still saw kind of, QQQs at least wanting to kind of play in that ballpark and didn't at least go down. But anyways, going into the top 5 stocks I'm watching, like I said, I'm gonna try to go through these really quick. Oh, I shouldn't have done that one. I should have looked at Tesla. What I wanted to look at Tesla, they had great earnings last week, but not stellar earnings. Going into kind of Tesla, they rose 105. So total Tesla's earnings rose 105% to 76 cents a share, with the revenue up 39 or 40% to 8.77 billion. Amazing. Also with that, they kind of held those 500,000 delivery numbers for the year. They kind of stayed strong with that, which lends itself to a strong fourth quarter. If you look at if you back into how many they would have to sell or deliver in the fourth quarter to get that 500,000, you're looking at about 181,000 that they would have to would be in the fourth quarter, would be an increase of about 30% from the Q3 numbers of 140%. So I think it lend itself. They didn't blow everything out of the water, but they didn't miss anything really heavily. They put everything in the right direction. I think it's like the fifth solid quarter of increased earnings and shit. So that's always good to look at. But also it sets it up for a really positive Q4, I think. Also kind of some Tesla stuff for last week. And as you can see with the charts here, hey, Tesla had an up and down week. Hopefully you can kind of see that right now. They had an up and down week, honestly. The beta of the FSD, so full self-driving, released on Thursday, I believe. But also some mixed news from China came in, about 30 to 50,000. Numbers vary. What Tesla says, what China says, 30 to 50,000 recalls. So you see that in those numbers on Friday. Friday dipped real fucking hard. Over here, yeah, that was basically Friday, the sell off there. But also, there's kind of contention on what actually happened. Tesla saying, hey, we're not at fault, but they're kind of having to do it anyways to kind of do business in China. So Beijing came and said, hey, you need to recall these, even though it's not necessarily their fault, or at least that's what Tesla's saying. Either way, I buy Tesla dips and sell the rips. You know how I love it. Anything below 420 is kind of that prime area, and that's what we saw here. It definitely had a really nice pop on earnings, and I kind of, I played it a little bit wrong because I thought that these earnings were coming up this week. They were actually last week, so I would have played it way differently, but I was still able to kind of get some good shit in there. Basically, I was following it, and any of the dips I came in and said, fuck it, let's go. This was actually the earnings play right here. You saw a really nice like 5% pop over here on earnings. And for me, I was out actually before earnings because I came in a little bit later. I was looking for a dip. I got my 420 dip that I love. Actually, a little bit below that, I think, is when I got the dip. But yeah, I played the dip at 417. And I was like, fuck yeah, let's go. I was kind of like, I was kind of mixed on how Tesla was going to play earnings. I never bet against them, but at the same time, I was a little late to the party. So I was kind of very hesitant or very cautious with my trading. And then coming into the next day, the day of earnings, if you look here, I was kind of like, I was playing with it here, and I saw, hey, a really bearish signs here. It couldn't break over this 432 line. It tried 3 different times, a triple top, sold off, and I was like, fuck it, I guess I'll get out. Got out on this one, still made some good money, but still, I didn't play it all the way and hold till earnings. But you definitely, so I missed all this pop here, but hey, I was happy with the way I played it, because you don't know with earnings, right? Things were selling off. This was going down, RSI was going down, MACD was going down, whatever. But what I love about like overreactions, Friday's overreaction. So that was a hard sell off on Thursday, kind of stayed at this line. Right, and Friday you saw that news coming out. So you saw, hey, I was kind of watching it a little bit. I wanted to get back in. I just wasn't sure exactly where. It had a triangle here, a flag, and you never really kind of know what triangles. Broke down. And Friday, there was a rumbling of the thing with China coming out on Thursday, and then Friday it hit, and it fell to 407. Fucking money right there. Like just leaving money on the table over. Your textbook overreaction to news, and then it came out that maybe hey, Beijing made them do that, and it wasn't necessarily their fault. And of course, like I said, anything below 420, it's not a coincidence. If you watch Tesla for a while, which I have been doing for a while, also got to plug this book, Elon Musk, Tesla, SpaceX, and the Quest for a Fantastic Future. I'm not just a Tesla fanboy. I mean, I'm an Elon fanboy, but also I do my research with that shit. This book is fucking great. Also, hey, and what you see here is over the past, since 9192, since that sell-off, it's been in a triangle, and I've been watching it to kind of see what it's going to do. It hasn't busted out of here yet. I thought earnings was going to take it, but I think we saw, like I said, with earnings, a little bit of mixed reaction there, especially with it not like blowing it out of the water, but also it not like, China coming in and that whole thing going on. But still, hey, it's still within this channel. You see, and what I'm excited about is again, like when we looked at the cues, this hammer right here, this indecision. Sellers are trying to come bring it down. Buyers aren't going to let it go down. Buyers aren't yet letting it go down. I was looking for a bounce off of this 400 number. That would have been sweet. It didn't go all the way down, but still you see RSI coming down on the day, right? So you see RSI coming down a little bit. Like I said, I'm going to speed up a little bit. RSI coming down. That way, you see this moving average convergence, divergence, not crossing or not at least leveling out yet. So that's something to think about. But also, hey, and like I said, anything below 420, I'm buying these dips, and that's how I play it. But also, what I like, if you look at the weekly chart, it's touching again this 10 EMA. So when it gets too far extended, it has to come back. It has to come back to reality, dip below this line, at least touch it, and then go from there. You usually see touches, you see dips, and then you see rips, and that's what we needed here before it starts flying and consolidating. It touched this 10 EMA, and I'm loving it. But still, people are undecided about it, right? There's no volume, like decreasing volume coming in. RSI coming down a little bit. MACD wants to cross a little bit to the bearish on the weekly chart, but still, hey, I think there's a lot of upside there for Tesla, and why I'm going to play all the dips and then get the rips, until it shows that it wants to break 450. 450 has been that level of, it's staying below that. That's been 450 and 420, or sorry, 440 have been really heavy areas of resistance. So I'm selling when it touches that until it proves to me that it can break that. And it's been working at the swing level, and I haven't been trading this effectively day, but on the swing level, it's been really good. Anyways, jumping in, I could talk about them all day. Also, to go into that, I'm calling Tesla, of course, but I'm also calling out their ETFs that I love. Like I said, this drive is really fun to play for me, because anything above 18 bucks is fucking money right here. It plays between these lines. It tries to break this 1830. It never hasn't done it yet, but still, when it bounces off of this, great plays. I catch it all the time when it dips, and get a little money there, get a little bit of money, not a lot, but you get a little bit, right? And that's how I like to play that one. Also, iDrive is the other one that I really like. So I'm calling Tesla. I'm calling out all the EVs and stuff. EV ETFs and shit. And this one's same kind of difference, right? It breaks this line. It hasn't broken out yet specifically, but it looks really bullish. It looks like it wants to come up. This RSI is picking up. This MACD looks like it wants to cross, but still, it's holding. What's important to me is holding that $35.06 support line after it broke it. So that's amazing. So I haven't actually played this one as hard as Drive, but still, I think this is a lot of value here. And this is a really fun one to play if you want to play an EV, but not have all like your eggs in one basket, right? Anyways, jumping out of that one, the other earnings that are going to be on this week is ATVI. And if you're not familiar with ATVI, it's basically Activision Blizzard. If you know me, I'm a nerd, I'm a gamer, I love all that shit. They have earnings on 10/29, which is Thursday. Gaming has been at an all-time high during COVID, but also the trend was already going to gaming like as taking off, but kind of COVID pulled the timeline forward with it being more acceptable and more people getting into gaming. Call of Duty is actually one of the big ones for Activision Blizzard. Call of Duty has surpassed expectations in recent quarters, and the recent approval of Call of Duty Mobile in China will continue to drive strong bookings into the year. The game is set to officially be launched on 10/29, which is actually when they have earnings. So that's pretty cool. It's going to be a two for news that day. It's going to be earnings, and it's going to be the launch of Call of Duty Mobile in China. So it launches next week or this coming up week, and they already have over 50 million pre-registered users. Imagine the microtransactions from that. Oh my god! But anyways, Call of Duty's of course strong performance, but they've also been assisted by other strong titles in Activision Blizzard. Of course, World of Warcraft, and I'm a World of Warcraft nerd. I don't play anymore, but I read all the books. They have a new expansion that's set out later this year, so that's going to be a really hard shine for Q4. They actually pushed back the date for that. It was actually supposed to be, I think, this month. So they pushed it back, I think, another month. There's a new date for it, but basically, new World of Warcraft expansion was going to be soon, if not already now, but they pushed it back a little bit. COVID and stuff, they're having to adjust. Blizzard's having to adjust how they work from home, so they pushed that. So there was some kind of negative reactions to that. But anyways, the expansion's coming out this year. They have Overwatch, Hearthstone, and Candy Crush for all you mobile fucks. But anyways, but also with the good, there's bad. Blizzard just announced the release of its French office. So Blizzard has an office in France and stuff, and they actually are letting them go. They announced that they will be released, and a lot of top executives that started Blizzard have left to start new projects. Mike Morhaime, Chris Metzen, two of the ones that I love. Those are kind of the heart and soul for Blizzard for me, and they actually left and are doing other things after they joined up with Activision, because there used to be two companies, Activision and Blizzard. They merged into one. Now it's Activision and Blizzard. And more money, more problems type shit. But anyways, they cashed out. They made their money, so I'm not mad at them. Starting new things, but they still, even with all French offices closing, important people that started leaving, they're still a leader in the video games, and damn near started the whole esports movement with Call of Duty League that they have, Overwatch League, etc. And I love the recent pullbacks here. If you're looking at the chart, I love all these recent pullbacks. It was high flyer, pulls back, really good Fibonacci retracements here. So I'm really liking this as a consolidation area. If you see, it's very channely. It's between this resistance and support line kind of playing through there, which I love. You don't see a hard run up. So, to me, the money hasn't been missed. So yeah, I love the recent pullbacks, and it seems to be fairly valued with average analyst price price targets of $95. So analysts, if you go to Yahoo Finance, analysts, there's like an aggregate number of all of the price target projections. And right now, it's under that $95 that is average, right? And they consistently beat EPS expectations, but they sometimes rise or fall after their earnings report. So you got to take that with a grain of salt. But still, what I love about Activision Blizzard this quarter is the same quarter year-over-year EPS. So if you look back this quarter, Q3, versus the previous year, same quarter for the previous year, their expected EPS is actually 178 times or percent higher than this quarter for last year, right? That's huge, right? Astonishing. We still have the holiday season to look forward to, so I love it. I'm looking for the run up and to hold it, to kind of see the weakness. And what I loved about this one is very trendy. And what I mean by that is I supported this area of support here. And what I was looking for was the Fibonacci retracement. So I said, hey, Fibonacci retracement is you look at, hey, there was a break in the trend. I'm going to place one here. And this is not like a coincidence that this 38.2, which is a very popular Fibonacci level, it held that, right? I marked it there. Hey, if it breaks below this, maybe look at it closer, but it kept on holding this line, which I love. And if you do it that's defensively, if you do it offensively to kind of see what the price target can be, you can also use Fibonacci that way. So I kind of used it again to say, okay, cool. Like, let's keep that in consideration. Let's say this is the high, this is the low, this is what it's going to bounce off of. What is that? Where's that 38.2 line here? It's about $87, right? So I kind of have like high level what I'm looking to do. So far it's been respecting it. So I would expect more of the same. Not to say it's going to do that, but I'm expecting more of the same. So I felt confident getting into it last week, or looking at it more last week when it did hold that line, and just buying dips. Like this 79.57 was great dip buying. It hold this double bottom here, squeezed up here, and just keeps on playing from that way. So I'm already ahead with this. I might get out on Monday. We'll see, because I'm already kind of close to what I wanted for a price target. Maybe not exactly, but I'm trying to play very conservative as we go and see elections, because you never know. And for ATVI, even when they beat EPS expectations, they sometimes sell off. It's not the worst thing in the world, honestly. You're holding Activision Blizzard. I'm a believer in them. I've been a believer in them forever. And, I've actually held them super long before, and it always pays off. All right, going into the next one, it's going to be Etsy. And so I like Etsy. They have earnings on 10/28. So what is that? 10/28 is Wednesday. So, and they're like, Etsy's like the small business creator play here, which I love. I've worked for and with small businesses for a long time now, and I just love the ingenuity and the drive and determination to be a small business owner and creator, why I'm looking at Etsy specifically, because I love their mantra, right? But also they're with the COVID kind of push to buy local, they've been a really big it's impacted them greatly, right? So if you look at Etsy and you look at their gross margins, I'll just kind of keep in it. Hey, it's a Fibonacci retracement, and not just like Fibonacci because it gives me like a high level. You use one indicator along with other indicators, price targets, RSI, volume, MACD, use all those, or Fibonacci, whatever. Use all these as things to help you plot what you're going to do. And that's kind of how I use this high level. I don't use it and say this is exactly what's going to happen. But hey, if it respects that, I look into it better. But also if it breaks that, that's another area to look into, an alarming thing. But anyways, looking at XAYM, I am excited on their 10/28 earnings. Gross merchant sales were actually up 147% versus the same period in the prior year, with marketplace revenue growing 146% and service revenue growing 111%. Holy shit, triple digit numbers across the board. Overall total revenue increased 137% to $428.74 million. Holy shit, a lot of big numbers getting thrown out there. Basically, it's fucking growing. During the second quarter of this year, active sellers grew 35%, which is great, but more importantly, active buyers grew 41%. So the buyers are growing faster than the sellers, but that wasn't always previously. The sellers were outgrowing the buyers, but it's nice that it's kind of turned that around, and the buyers are still growing, but the sellers are still growing on the marketplace because it's a buyer and seller marketplace, but the buyers are actually growing with more. Haters are gonna say, hey, it's all mask sales because Etsy did have that's where kind of masks and DIY sell masks kind of grew out of. Haters will say that it's all mask sales, but if you look at the numbers, masks are all they sparked the movement, sure, but non-mask sales actually grew 93% also. So mask sales are growing, but also that's leading to non-mask sales too and stickier users. I love the pullback here. As you can see, kind of looking back, we saw all-time, flying all-time highs on 1014, but also a recent pullback from that. You know me, I like pullbacks. I'm pullouts and shit. Anyways, Etsy, I love the pullbacks and valuation level. The fair price, so again, going to Yahoo Finance, looking at the average analyst prices, that's at about 153. So we're off of that 137, which I love. Over the last 12 quarters, they have a 66% EPS beat rate. But even when they meet expectations, they do tend to sell off, but also rebound eventually. So it's a calculated risk, but at the recent price sell-off, it's attractive to me. So again, I'm gonna buy the run-up, and when they reverse, or if they reverse off of that, I'm gonna sell. Well, when I see weakness, I'm gonna sell. I'm gonna come in, I'm gonna look over, just keep it open while I'm working and say, oh shit, they're selling off, at the earnings or before the earnings. And that's when I've been watching it here, kind of seeing what it's going to do. But it's respecting this line here. So if you look at this line right here, I think this is the 38% Fibonacci retracement. It's respecting the shit out of that line and bouncing off. So I felt comfortable going into it, and the same thing, I used Fibonacci here and I said, hey, let me see kind of what they're doing. Here, starting it, ending it, and seeing, hey, where is this support line going? 38.2 is really strong support here. Okay, great. Let me watch it. And it did reverse off of that line, basically. And we see the trend hit that Fibonacci line of support, bounce a little bit below it, but also bounce off of it, which I love. But also the thing I love about Etsy, they're just strong. They're just, they're definitely really strong COVID play, which I love, and the charts are really looking really good for me as well. I think that, hey, really strong play here. All right, so far we had Activision Blizzard, we have Tesla and EV ETFs, we had Etsy. The next one I'm going to go to is PayPal. So PayPal's a little bit maybe more forward because they actually have earnings on 11/12. So I'm setting up for the next week's earnings. But what I was actually watching, so I called out, I think it was right here. So 9:20, I called out PayPal for the first time because I really liked this downward trend that it was going to break. So I played it here, but also I want to play it. I played again up here, and I'm going to tell you why. When you look at PayPal, they had a really nice cup and handle. You know me, I like those cup and handles. So you see this really strong cup. Sellers came in, they drove it down. Buyers came in, but then they kind of cooled off, and it really hasn't been over average, trading volume over average yet. But you did see the break of this cup here. So this was the break line when it did break on 10:21, which is when I kind of started playing around watching it. It broke that, and with the cup and handle, you basically see a cup formation. So think about a regular cup, right? You see the handle. The handle usually breaks about 10, within 10%. A good handle is going to be within 10% of the break price. So it didn't actually get all the way down here. Right now, it broke, and retraced about 4 or 5% so far. So, but it looks like it wants to bounce off of this line because sellers, buyers came in, they broke that resistance. Sellers came in, but now sellers are kind of exhausted here. So we'll see if we kind of get that bounce up. So I really like that for PayPal. But also, so I saw the cup and handle. I saw earnings were coming up on 11/2, and for PayPal, the earnings, they blow shit out of the water. Also, some recent news for PayPal specifically is they're moving into crypto. They're leading the way here in terms of payment processing, opening up the ability for their users to buy and sell Bitcoin. And as we just saw, maybe last week, Bitcoin actually broke 13,000. It was playing at 12,000, broke 13,000 per. So nice movement trend. It's and PayPal's capitalizing off of that. But also with their PayPal's also exploring acquisitions of cryptocurrency companies, including Bitcoin custodian BitGo. Not to say that they're acquiring them, exploring that, right? So you buy the rumor, sell the news, is what I'm saying. But anyways, also, if you look at the price, it's a relative average. If you look at Yahoo Finance, relative average analyst estimate of $220. So we're well off of that right now at $203, $17 under that. And they have a record of beating earnings. 91% of the time over the last 12 quarters, they beat earnings. And with that, over if you look at the past 6 quarters, they've actually moved up off of earnings. So their prices went up after earnings 83% of the time. So not only do they beat expectations, they go up after that. As we see with Activision Blizzard, even though they beat expectations fairly often, sometimes they don't actually go up with price. So you want to be wary about that when you see earnings and they beat it. You think it's going to go great, like with Chipotle. You think it's going to go great. They actually kind of they don't beat it enough, and then people kind of sell it off, right? I mean, eventually, if you have a good price point and a strong company, hey, you invest, you don't trade. I get it, but at the same time, if you're in this for a swing over a day, a week, 2 weeks, you definitely want to be in that area of like being right. But so for PayPal, I love it because hey, they're reasonably valued for according to Yahoo Finance and stuff like that. They beat EPS each a good amount of the quarters, and they also move up after earnings, right? So I feel reasonably optimistic about this one at the good price point, especially if we see this completion of the cup and handle and bounce. I feel very happy with that. And for me, PayPal is one of those you buy, you scale out, you sell 50% and then you sell 25% of that after that, and then you hold it long. This is a company that I think you hold for a fucking long time. So yeah, all right, PayPal's another one that's forward looking, maybe another week, but that's how I'm gonna play. And that's I had to, like, after Chipotle, man, that just fucked my shit up. Not it didn't fuck my account up or anything. I didn't take a hit to like my paycheck because I keep really tight stop losses. I've learned not to hold shit when they're losing. Chipotle actually did come back too. Chipotle, I mean, it actually sold off faster than I actually was anticipating it. But if you look at CMG, they came back a reasonable amount from their earnings decline, but at the same time, big ass drop, right? So they're back, within shooting distance of where they were at. Maybe what $20 off of where they were at, but at the same time, like, I didn't want to hold it because you never know. It was great earnings, but it wasn't great enough. No, their margins kind of suck. They didn't get as much margin off of their drinks. People aren't buying drinks apparently. Like, there's a lot of, they beat it, but were they good enough? No. But also, if you look back, and which I should have done, look at this. Like, so 1, 2, 3, 4, 5. Yeah, within 7 days, this was the price movement to get. So this is what I'm looking back at more. But also, hey. Even with a strong company, you have really strong sell-off, but it's on its way back. It's just how long you want to hold it. I didn't know which way it was going to go, so I said, "Fuck it, I take my loss." So I've learned to keep a tight stop loss and not just hope that shit's gonna go back unless it's a company you believe in. For Chipotle, it wasn't one that I believed in enough to hold it through and like possibly lose more money. So it didn't hurt my pocketbook, it hurt my pride. But anyways, going into, I don't know why I got the tangent. Going into the next one, this is actually an honorable mention for me. So this is honorable mention. Twilio has an honorable mention. They have an earnings report on 10/26, so that is actually fucking Monday. Damn. So we're probably a little bit late to that, but that's how I was gonna play it. I'm looking into it for the bounce from the reversal, not necessarily the run up, because it's had a really healthy run up. Look, you see that? I mean, it's cooled off from that, but it had a really nice cup and handle. This was the thing to get right here. Like I said, hey, you get a cup, you get a retracement, and then you bounce off of that. So it was really nice, but I think that was movement to get. And right now, RSI is picking up, which is amazing. So RSI is coming up. MACD is still looking a little bearish, but at the same time, I think if you look at the, so this is what I kind of liked about it. If you look at the week level, hey, you have the breakdown, not right there specifically, but you have that kind of touching back on this 10 EMA, which, hey, when it gets too far extended, you want to get a healthy pullback to touch it or go under, and that's what it's kind of doing here. So that's kind of why I liked it as well. But anyways, the thing about Twilio is there had a lot of chatter on social media, right? So they've had a lot of chatter on social media and talking heads talking about Twilio, which I love Twilio. And they're basically, Twilio, think about it as like a way for developers to talk to their customers. The past couple tech companies I work for, they use Twilio as a communication medium for their platform to talk to customers. There's a lot of play there, but they're not profitable, which isn't the worst thing. But the same quarter, so year over year EPS for the same quarter last year estimate is down, and they actually have a history of missing earnings per share 50-50, right? Over the last 12 quarters, it's a 50-50 chance if they beat or miss expectations. And over the last 6 quarters, they only rise on EPS 17% of the time. So even at that 50-50, they only rise 17% of the times, even at the time that they beat expectations. So that's why for me, I wasn't trying to get it on the run up. I was going to get it on the cool off. So for me, looking at this for 10/26, which is Monday, isn't the worst thing in the world, because this actually right here is actually pretty good, because even though it ran up, it was in a clear downtrend. It broke that downtrend so far. Well, I mean, the candle's broken above that. This is just a bad line. But at the same time, you don't see any volume. You don't see a lot of volume coming. You see RSI picking up. So this one actually might be a good play, but I'm going to wait. And this might be a runner, honestly, but I'm going to wait because, it's kind of up there in terms of price. But also, but the thing about Twilio is, and if you look back, when they do, so looking at that 17% of the time, this is why I like it, because when they do beat expectations, they fucking kill shit. Where is it at? I marked it somewhere when I was looking at it. Boom. Here is, I think it was, 5.6. Yeah, 5.6 when they had the earnings that they beat expectations, and then I don't even know if they beat that expectation. Anyways, this is an example of the 17% of the times when they do earnings and they raise. And actually for this one, so the next day after earnings, they were up 40% the next day. And within that same week, so it's 7 trading days, they were up 53% before they busted. So you see that here, boom, jump. Boom, jump. And that's why I say with Twilio, when they hit it out of the park. But for me, there's just too many unknowns. So I'm going to catch it hopefully on the reversal and maybe not play it specifically, even though they had an all-time high and they cooled off of that, a great amount, right? So, we'll see how I play this one, but I might just kind of catch the reversal. Anyways, gonna wrap it up. 25 minutes or less. So Tesla and EVs, they didn't have the best earnings, but they set up really good earnings. They didn't fuck anything up. They beat what people were expected of them, and they set up for a really strong fourth quarter, right? Activision Blizzard, it's a gamer. They're an industry leader in a hot industry that's COVID, but also post-COVID, because the trends were already going that way. They have all the hot games and shit. Etsy, which I love because they're a small business creator play, and there's been a really strong push, especially during COVID, to buy local, right? And Etsy, there's basically a huge moat between Etsy and anyone else that does something close to what Etsy does. Amazon tried to do it with their like small business marketplace, but that hasn't. They just couldn't compete with Etsy. We saw when Amazon did that, they didn't even touch their numbers, right? Etsy's still strong and taking off. Triple digit growth across same period the previous year across. We've seen just tremendous growth from there. But a calculated risk, right? Because they don't beat EPS all the time, only 66% of the time in the last 12 quarters. And even when they miss or even when they beat expectations, they still have a sell-off sometimes after earnings. So that's something to think about. But it's generally going the right direction. PayPal also, I love PayPal. I've loved it for a long time now. I think that's throwing it back to Elon Musk. That was one of his companies. Anything he does, I'm a fanboy of. I think that's the ones. Twilio also. But for Twilio, they don't always hit expectations for EPS, but when they do and they run up bigly, 53% in that same week. Woof, that's great. All right, Catalyst Corners, party takeaways and socials. Like Jim Cramer said, it's the earnings Super Bowl this week with tech leading the way with FANG. FANG is ripped during COVID, but they've taken a break recently, specifically after 9/2. And why do I say that? Well, if you look at the Qs, right, bring up the Qs. This was, they were flying high, especially after COVID. This was COVID. This is them flying high, right? So led by FANG, 9/2 sell-off on tech, right? Really cool sell-off. Or really cooling off of them, and that's just kind of continued, right? But look at this fucking cup right here. We'll see if it is, but it could definitely be on its way. But this week is going to tell exactly what's going to happen. I think this next week is going to set up the end of the year for us specifically. Be careful and do not chase anything. There's still massive uncertainty, like we said. We're in the middle of elections. Elections are general elections are next week. No stimulus, probably not going to be one. COVID spiking in basically all the states. We have a lot of uncertainty going on, so be careful. Buy the dips, sell the rips, sell into strength, and do not be afraid to take profits and scale out when you're ahead. You will leave money on the table, sure, but you're going to protect the money you've made, and that's what it's about. It's about just prolonging your checks to the next one. Have type stop losses, even when you have to take earnings. The hardest lesson I learned is that, take losses when you need to take losses. don't blow up your bank account. Don't fucking average down too much. But always have a little on the side to reserve to be able to like give yourself some cushion. And that's how I've managed to like scale down sometimes and get into better positions when I maybe got in too high. So don't put all your eggs in your basket right away. Even if you fucking love the basket like PayPal, go slowly into it, right? You might leave some money on the table, but you're gonna protect yourself a little bit more. All right. Again, follow real_bullish wherever you get your social media poison. Give me a sub here. Make me feel good about myself. Stay bullish, fam. Good luck to all. And remember to wash your hands and vote. All right. That's going to be it for me. Y'all have a good one. Peace.